Good. So let's get started here. Let's go through a number of markets and apply our strategy. And of course, for those that are new to the session or new to hearing these videos, what we do here is apply a strategy that was developed a long time ago, about 20 years ago, that quantifies the market's real supply and demand to find areas of imbalance in the markets, so we can identify where banks and institutions and basically the smart money is buying and selling, so we can buy and sell there also. By understanding where your key supply and demand levels are, meaning where there's many unfilled buy orders and unfilled sell orders, willing buyers and sellers, we can figure out where market prices are going to turn with a very high degree of accuracy. And once we can identify those market turning points because of the supply and demand levels, that means we also know where they're not. And where they're not is where prices move easily through. Those are where trends happen. Smaller trends, bigger trends. So the goal is to identify where prices are going to turn and where prices are going to go. I have my list of markets on the side here that I typically go through, but I'm here for you. So if you have any markets you want to go to, that's not a problem at all. Just let me know and we can do that. And lastly, I do, this never happens, but I have a conflict at the bottom of the hour. So we'll probably go for about a half hour, maybe a little bit more, and then we'll conclude. All right, so again, if you have any markets you want to look at, let me know. Otherwise, I'll run through my list. And why don't we start with the dollar? Okay. So most of you that have been with us, obviously you've heard about the 103.40. It's been a key level for us. Prices have come down from that. And now what has happened is there's a new demand zone developed. And the market is just bouncing off of that today. So let me get that in here. It's barely hit that demand, but nevertheless, it's right there. So this is key for us because the dollar hitting demand, and let me show you. Okay, so dollar having some demand down here means it's likely to turn higher as long as there's no supply that close to current price. In the big picture, we probably don't have any significant supply until 103.40. So that's key, because if we're looking at markets, especially FX markets against the dollar, we'd be looking for prices to fall, shorts. If we're looking at, energy markets, commodity markets, you name it, same thing there. Okay. Can the dollar go deeper into this demand zone? Could, but not likely, right? I mean, no, it could go. Going deeper into this zone it can happen, no problem. But going through this level on the first time back, that's not likely. You're likely to see a bounce before going through it. So keep that in mind as you look at and trade any other market here. Okay. So let's do that. Let's look at some other markets. You can see the equity index markets have some supply levels just sitting just above. Let's go to some FX markets. And again, if you have an FX market you want to see, let me know. Otherwise, I'll just run through the majors. So you can see the euros come way down. But what we also see is sitting just below current price. And we can look at I'll make this a 60-minute chart here in the lower left corner. Okay. Looking at this 60-minute chart in the lower left corner, really don't have any significant demand below current price. We just hit demand the other day, just a few days ago in the euro, but we have supply above. That's my point. Okay. We can see on the daily. Then we come down to the small time frames. Watch this 5-minute euro up here. We have a little bit of supply right up in here. And again, a lot of this coincides with the dollar demand sitting just below. So lack of demand below, presence of supply above, dollar into demand. You can see how the whole puzzle is put together. Let's keep going. Run through some of these quicker. We'll slow down at others. Aussie dollar just continues to fall off that weekly supply that we've been looking at now for many, many, many months. It's actually been a couple of years, almost a couple of years, but continues to fall off that level. And now we're building more supply zones just above. Just like the euro, if you look at your 10-minute chart here, pull this one up. I know price, sorry about that. I know prices come down. Let me actually blow this up a little bit more. There we go. So I know prices come down quite a bit, but again, we've been down here before. So if you look at the 74.80 area, the fact that we've been down here 3 or 4 times, and more importantly, how deep you've gone into that area, tells us there's probably not a lot of demand left. For sure, the strength of the floor is weaker. Combine that with a fresh supply zone just above, and here you have it. Now, this is not the most ideal supply zone, but let's look at it. There's a couple odds enhancers here that we don't that are worrisome about this level, but nevertheless, it's very low risk, and this is a numbers game. So you take the trades that meet your criteria and don't think about it. Make sure you're okay with the risk. We already know you're okay with the reward. Okay. So that level comes in around 74.88. And so we're just a little bit off that. A profit target for this one. Let's get some more data in here. We're going to need it. Probably need a lot more. And then let's get a horizontal line below current price. And that way we'll be able to scroll left. Now we don't need that much data. Okay, let's scroll left until we hit price. It's going to be just below 74.80. So let's just scroll till we see that line again. There it is. So there's the demand that we bounced off of already. Below this is not demand, right? This would never qualify. None of this would qualify as demand. So we go lower, and we have all this, and none of that would qualify as demand either. So, but let's just let's say that we want to get out in here right before the origin of this rally. That's not demand, but we're talking about 74.88. Down here, 74 even is where we have this big spike up in price. Again, not demand, but so keep it simple. Call 74.20 the target. Whatever the available target is, for those of you that know the Online Trading Academy rules, we want to take about 80% of that. Again, nothing magical about that 80% at all. We just want to pick a number that's before the opposing supply or demand zone. Okay. Let's keep going. So plenty of room there. It looks like we're talking about around, sorry about that, 50, 60 ticks of profit. And on the risk side, you are looking at about 94 on a stop. So there you go, about 6, right? About 6 ticks on the right? About 88 to 94 would be your entry stop. Okay? And again, it's a numbers game. Just take all the trades, make sure you're okay with the risk, and if you are, you just take the trades. Let the, this one's a real nice payout. So risk reward looks ideal. All right, let's keep going. If you have any questions or comments on strategy, also just let me know. That's basically, let's see here. I want to come to another market that has just a little bit bit clearer opportunity. And we'll probably also switch this out to, we're looking at the Swiss here, but again, very similar picture to the euro. Let's pull up the Canadian dollar, see what we have here. Yeah, oil. Well, yeah, we'll definitely look at oil. I trade oil a lot. No, I don't. I don't trade spot forex through TradeStation. Mm-mm. I look at the charts through TradeStation of all the markets. Okay. Canadian, not a whole lot here to take a look at. I would just watch for supply to develop on the smaller time frames. But yeah, we could go, let's switch out from FX and go to, we could start with oil. Love looking at oil. Oil's hit a very, very interesting area up here. Let me scroll left and you'll see it. Okay. So you can see in oil we have, I'm just going to put in a bunch of little levels here. You got that area. I'm just putting in the stuff that meets the criteria that we're looking for. Whoops. Okay. So you can see price struggled at the first level, and then we've got that second level up there that it hasn't even reached yet. But I think you're looking at the higher time frame. Yeah, 53.40, 54. 10. Yeah, let's go to the bigger time frame here. So you're talking, I think you're talking right up here. So you're talking this thing here? Just this whole area. Yeah, so a couple things going here. So I showed you on the smaller time frames, we have like 3 or 4 levels stacked on top of each other up here. Number one. Number two, this is where prices fell from last time. So turning at that spot or even a little bit higher is fairly typical. What we want to look at is also too is what does the demand side look like below? There's really not a ton there. Oil really, was starting to turn and then spiked up on that news, that OPEC news. I think it was yesterday or the day before. And but again, with that news and oil not screaming higher, looks like there's a good shot that it can fall from this area. Let's go back here. I think that's what you were talking about. Yep. Okay. I tend not to trade the crosses and they're totally fine, but I tend not to trade them just because I find more opportunity than I know what to do with in all the other markets I look at. So that's the only reason. But if you have a cross where there's just a great opportunity, I'd be happy to look at it. Let's look at a couple of those and see what we have there. All right, here's the peso. Okay. So, not bad. I think, again, the thing to do here is wait for a rally to short this market. But with the dollar, you're not likely to get that rally in the peso yet. So, when that comes. But yeah, they're great markets. Just make sure they're nice and liquid, Yeah, we can look at the pound. Let's take a look. Let me go up here to the spot pound. There we go. Let's see. Oops. Just lost connection here. Hang on a second. Hang on. Give me 1 second. Let me log back in. Well, we don't have to log in to do this chart, so let's do that. So 125.35. Okay, got it. So you're looking at this area right here. I think is this. So this is the. You're looking at this area right here. Yeah, the rally base drop. Very ideal. Yeah, picture and level there. So just to confirm that, let's go down. Let's always go down a time frame and look inside that area. Just take a little bit better view. Okay, and when we do that, we see we have a little bit of supply sitting just below it. That helps, right? So notice there's a little clue here, right? See how price spiked up into this area? Okay, and then started to fall. Obviously, just again, the key to getting this and key to doing this is I can't emphasize enough how important this is. Don't overthink things. Don't overcomplicate things. Take this for what it is. The fact that price spiked up and came right back down in this area here, and this will be a bigger base as we go down time frames, but I think we can assume that, right? That just tells us that there's supply here and there wasn't enough buying, enough demand to get through it, correct? So if you think of ammunition, you've got buy orders and sell orders. Okay. Some of the buy orders are, right, a number of the buy orders were used up here and got filled, but it wasn't enough. So the next attempt up, is there going to be more demand or less demand? There'll probably be, there's very likely to be enough demand to get price up here again. But is there going to be, the same amount of buy orders, more or less? Right? Yeah, probably less. Okay? That's just how it works. Again, now I come from the trading floor, and I had the benefit of having orders in front of me, so that's where all this, comes from. It's not like I dreamed this up or anything. This is how it really works, right? So less. So ideally what you want, you're talking about this level up here. Ideally what we want is what causes price to turn. The only thing that causes price to turn is an imbalance. Period. So now, because of what just happened down here, if and when price gets up to the level that you're talking about, it's going to get there with fewer buy orders because of what just happened down here. And that's what we want. What that leads to and creates is a bigger imbalance. Make sense? So the presence of this little area below makes the level above a higher probability turning point. Doesn't make it a better level, because what happens below doesn't change much with this level itself. What we're talking about now is the buy side, not the sell side. The sell side doesn't change with everything we just talked about, but the buy side does, because we've used some of those buy bullets already. Okay, so I think you get the point. Yeah, that looks fine. Why don't we, time for a couple more. Let's look at gold. Yeah. I would say on the time frames, whatever time frame you're looking at, one candle or two candles should never qualify as a supply or demand zone. what one or two candles should do, and I'll give you an example here. Let me show you. Let me show you here. Like even in here, let me blow this up. You know, you might look in here. Some people might look in here, and I've seen this. They'll say, "Oh wait, there's supply there," because you kind of had, you know, price stopped falling, and you have like one candle, and then it falls again. That would never qualify as a supply zone. It shouldn't, because then everything becomes supply and demand, and that's just not correct. What it should do, however, is cause you to look inside this area on a smaller time frame. That's the single biggest benefit of multiple time frames. We do that, so here we're looking at a 10-minute chart. Let's go down to the 5-minute chart. We look inside that area, and yeah, there is supply there. But it's not exactly where you would have, you know, had it over here. Here it's very well defined. Does that make sense? So that's why we do that. Okay, there's that. Okay. So there's a little supply zone above. Meets the criteria we're looking for. Careful with this one, though. It is drop-based drop. Okay. And those are found in the middle of moves. That's different from the, I believe we just looked at the British pound rally-based drop, which is going to force you further out on the supply-demand curve. So careful with that one. But nevertheless, you've got the dollar at demand. It'd be nicer if the dollar was a little deeper into that demand zone. It's not, but that's okay. And this would be just for a short-term trade anyway. The target on this one, so this is a classic little setup. Notice how far price moved away from the level. So that tells us that there can't be any significant demand until this price or lower. So we would put our target just before that. And again, there's a little more to it. Remember I mentioned the 80% of the available profit zone. But just to keep it simple, we know there's some demand, you know, at or just below this low. So we don't want to buy back our short position. We don't want to buy back our short position where there's competition to buy, which is demand. That's why we put our target or blue line just above that. Okay. So we probably put our stop right about 63, which is right in here. We'll make that a red line. Okay, there it is. And there you go. All right. Let's see. You know, I would say, yeah, I see your last question there. I would say the answer to that is really depends on your ability to, or anybody's ability to, you know, identify, you know, proper supply and demand zones, you know, and execute the strategy, again, just like a robot. If you do that, your winning percentage could be pretty good. I've seen it all over the place, but yeah, there's people that have really high winning percentages. But remember, the winning percentage is not the important number. The important number is your average win to average loss. Okay? That's why it's so critical to hold your positions to target. For example, I don't use trail stops or adjust stops or just anything. Entry, stop, target. Yes, so I don't use a minimum of 1 to 2. I would use a minimum of 1 to 3, and I'm looking for quite a bit more than that. Okay, but again, it's totally whatever you want. Try not to go into this with the mindset of, you know, you have to be right all the time or most of the time. That's the least important number to worry about. Okay, I shouldn't say least important, but it's certainly not up there. This is a numbers game. You're going to even if you're generally good, you don't even have to be perfect in supply and demand. If you could just put your orders in the market, leave them alone, and make sure your targets are offering you at least 3-to-1, and hopefully you're going for 5 to 10-to-1 sometimes also or more, you should do fine. Think of it this way. I don't know how much trading experience all of you have, but if you look back at all the trades and orders that you planned out, if you just would have put them in as planned and left them alone, how would you have done? My guess is you probably would have done really well. Right? So don't overcomplicate it. Understand that this is not rocket science. It's just pure. It's supply and demand at its purest. Okay. So it's the bottom of the hour. Like I said, we have to cut it a little bit short today. There's my email address, and hopefully this was helpful. Try to over-explain things and come up with some good trading ideas. Seiden at tradingacademy.com. If you have any questions, just shoot me an email, and I'll be able to get right back to you. And have a great week, everyone, and we'll